All right, everybody, happy Monday. Let's get to the business of harmonic patterns. How's everybody doing today? Excellent. Thanks, everybody. Welcome into the chat. Happy Monday, depending on what you're doing in the market, for sure. Quick, take care of a couple business items. Disclaimer. Thank you. Just take note. This is not financial advice. This is entertainment. Hope you find educational. This is Harmonic Pattern Podcast. What, 56? We're in there. We're making progress. What about the harmonic patterns? What harmonic patterns are we going to see today, folks? I think we need to look at the major markets. We need to look at crude oil. And we need to look at crypto, gold, everything doing a big reactive move, big serial moves going left and right here. How's everybody? What's up, Snipes? Yo, thanks for showing up, being a regular. Appreciate it. And there you go. It's going to fix a couple things. Probably the place to start, actually, crypto. For right now, I want to do a quick rundown because it's not going to take long. And today's more about the market. And I definitely want to let everybody know how I feel about the market based on the patterns. And I'm pulling up XRP really quick, trying to get my chart action together here. And we haven't done much in the crypto space for the past 2 months, 6 weeks. And it's just going to slog. I think I was using the word malaise for the larger markets, slog for crypto. You have nothing, quite frankly. Let's just bump over to Bitcoin quickly. And you have no reaction. I guess a week ago I said let's see where we are in 24 hours. So we haven't progressed in 24 hours, in a week, in a day, anything. Really quick, thanks for the shout out, Nerd Herd. Glad that you got your book. A whole bunch of other books did manage to get out, so everybody should have gotten their books, bar 1 or 2, 3 international people that I have to talk to, because international is not happening anymore. International shipments, folks, the books I've been shipping for a long time. Not going international anymore. For everyone that's new, please join us at harmonictrader.com and become a basic member. Then you can subscribe, but everything you need is simply set up through the Register Now link as a basic member, and then you log in and you'll get access to our programs, to the software for free. And we're getting a lot of inquiries. It's great. I'm glad a lot of people are coming to the harmonic pattern community. Please take advantage of everything free first, and then the free trials, all the free material, these sessions. Give it a couple weeks, and then absolutely, when you're ready to subscribe, you know what we're doing. So let's take care of that. Also, we're working with Harmonic Pattern Collection, and as I was saying last week, I think a lot of people, what people are graduating to and they're evolving to, is simply then they want to find out about the MetaTrader eSignal Ninja. A lot of people are asking about the advanced platforms, which I think is great, because with the Trading View and the downloadable platforms, especially for at-home day traders, with the whole complement, you have all the tools you need. So check those out. Hey Scott, what do I have to do to get a book? Joe? Well, everybody that purchases or subscribes is going to get a book if you haven't received one. So that's part of the new deal as well. And I think what we're going to have to do is a 1 day seminar next month. I'm trying to plan out my schedule, and it looks like I think we'll do a 1 day intensive Saturday session for everybody to join and for new subscribers, all of that. Again, I think what we need to do is kind of just have like a primer, if you will, a brush up on advanced framework ideas and strategies, especially with as crazy as things are. A couple of, the considerations of how do we handle situations like crypto right now? How do we handle situations that are not ideal? This is a big part of the total trading approach. Again, it's really critical to understand that this is first and foremost a framework, okay, and the levels, the zones. It's one of the reasons why I'm so adamant on confirmation strategies as well as just general price action. So that's my we have more information on that. Again, that and the gold member sessions that I'm trying to restart now will be an enhanced education on top of the software. That's the plan. I think for everybody that's wants to do this, either you're live now or you come and actually we're getting the majority of the people to watch the sessions, and I understand it's during the day, at night, but I feel like everything is current. We're seeing a lot of the longer term time frames take a while to play out anyway. What we need to do is focus on the major events, the major completions. The oil thing that just happened, crude oil at the 88.6 getting slammed today. Not a worry. It's just a type 1 reaction. But those are the things that I feel for gold member sessions. We will focus on kind of those event days with those special sessions. So more to come. Again, we had to really blast through this update last month. It was a major update that came, and we see the results now with the new pattern. Better pattern matches, better levels, just better responsiveness. So we'll get into that. But look, crypto is asleep, and you don't want market action to sleep. And again, let's just maybe jump even to total crypto market cap, because I think that's showing it, the laggard kind of behavior, lethargy here. This is just not. If we're in a downtrend, I think we all can agree crypto is in a downtrend. Can we agree that? Can we all agree that crypto is in a downtrend? And that can we all agree that a bear market, depending on what market you're talking about, what time frame, that you have to reach a certain percentage point with crypto plus time where you say, okay, we're in a bear trend. Nothing personal. Let me fix a couple of these. Nothing personal at all. But we're in a downtrend. And you're looking for things to develop to get out of this downtrend. You're looking for positive patterns. You're looking for positive construction, at least something that takes out prior 30 bar ranges. That's always one way to assess, tell me what the market has done in the last 30 days. Depending on what your time frame is, you could go to a 4-hour time frame and sure, okay, 4 hours, that's 30 bars. That's only like a week's action, but still, there you go. There's the last week. There's 30 bars on total crypto market cap. What is that doing? That's down and still down. Nothing there, even the last 30 bars, that says it. What about the last 30 days? Total crypto market cap. Let's bring up the ruler. TradingView has a nice manual ruler here, by the way, where you just click that ruler and take it back and it'll automatically count the bars. So 30 bars is there. What's it doing? It's down. It's a series of lower highs, lower lows. Maybe not so much lower lows, but certainly lower highs. Grinding resistance. What about 30 weeks? Again, the 30 bar rule relates to the central limit theorem. Any of you remember back from high school math, central limit theorem, all that means is that it's just a valid statistical sample where you can expect normal distribution of returns. What does that mean? That means, that sample size is large enough where you're going to consistently get measurable, quantifiable results without some kind of super skewed end result. That's why we look at 30. We treat all data, all trades as a price point of history that build the story of what the pattern is or what the market's doing. Crypto, total crypto market cap, the index here. Last 30 weeks, folks, all the way back to August. Amazing. August 23rd. You're essentially at the low end of this last mean, where that prior high and probably about halfway up there, and then we've just been trending lower. Again, the important thing to look at, if we can just say no progress over the last 30 weeks even from where you are, then I want to see what's happening in the last 10 bars here. And this is the thing to focus on, folks. Simple price action. I think a lot of people don't realize that simple price action is a key to the patterns because we're assessing the pattern framework with price action. And this is the trend of the last many, many weeks. Series, almost serial, meaning week over week, lower highs. Not so much lower lows, but lower highs. The inability to take out or even close above these prior highs. I just don't. That's not what you want to see in development of a turnaround. I mean, at least you would see individual bullish progress. I think last week was a real downer, and 2 weeks ago was even worse. This bar, and I put out a tweet that we would see 46K or 45.5. We had broken above some critical points in this one bar from 2 weeks ago. Now we're here Monday. Look at what that's doing. I think we're running out of time on this side too, that total crypto market cap has no life in it. And if you want to look at from the beginning of the year, at this point, we are going to finish out the quarter in 2 weeks. And that is going to be a pretty ugly quarterly, monthly candle, even on your monthly candles, folks. And I've been talking about this, where your total crypto market cap under 1.7 trillion, any close underneath there is a concern. You have made no progress against last month's candle. And obviously, all of these lows down at 1.5 trillion, under that, you're talking a real issue. And I feel like the way this is acting, that you could even come back and retest these lows is not a stretch. Should be doing things. It's not. For whatever reason, we're looking at the whole market in general. You're not even expressing one individual candle after all of this time. And in that scenario, I think we are looking lower. I think it's just kind of a grind where, sure, you can sit and wait it out, but you might be 6-8 months that this dips down into the 30s, 30,000, 33,000 for Bitcoin, or you even come back nominally 1.5, 1.4 trillion, but you're just gonna spend several more months here. You're not going to do it by the end of the quarter. You're not going to give even a recovery rally Based on the patterns we've seen as well, it's trouble. It just not the action at hand, and the individual high flyers that we're looking and looking and looking at things like this here. LRC, one of the altcoins, butterfly down here. There's a few patterns. I think there's a big bat pattern here on the weekly, or a shark. A lot of the high flyers have massive patterns there. There you go, 4-hour time frame. That's overrun. Actually, this is good on the 4-hour time frame to look at what's going on here. This is the perfect dud scenario. And it drags, and it just continues to drag in this way, where there's pattern completion. Where's 30 bars? 30 bars is like there. And then you go 300 bars to the right. By then, well, the small bearish pattern does not help. But after 30, 40, 50 bars, this thing's not doing what it's supposed to do, which is a type 1 reaction. And no need to spend another 2 months here to the right. I really think that Luna has acted quite well. And if you recall on the 4-hour time frame, remember the type 1 here. This is what we outlined. Maybe it was last Monday, but it was a type 1 right down to target 1. It was exact. And we looked for the return back to 98.79. You have HSI, confirmation, type 2. Very nice. That's what you want to see. And you would take your shot on that type 2 right there on the check back. Everything's there. I mean, really, really a sweet setup. Now, another situation where with Luna, we run into 2 bullish HSI signals. We're breaking back out of that short-term downtrend. Probably another run back up to 100. This has been by far the strongest crypto. And we'll see and take another shot. This is absolutely a real make or break pattern, and will tell us a great deal about larger crypto market. Because if Luna rolls over and starts tanking, there goes your last hope. There goes the last hope for crypto. Speaking of hopeless, here's Ethereum. Sorry, I just don't. This languishing behavior is becoming a problem. And it's not only the languishing behavior, technical malaise, I guess, if you want to say. You're just not breaking. You're not even threatening downtrends here. You're not threatening this downtrend at all. It's not afraid of it. The sellers are by far not afraid of this thing breaking out. And we've had a couple of opportunities, couple chances, some daily, weekly signs, 4-hour patterns. Here's a 4-hour Gartley, just right off the top, following this bat pattern. So this is the other thing. As we go along and go further and further, this bearish pattern on the 4-hour for Ethereum at 3,200, that could end up being quite a nasty continuation. It was a type 1 on the first reaction, and then came back for a perfect type 2. There. So 3,200, it would be, I'll say this, likely to see this below 2,200, or even, I would say, well below 2,000 before this thing gets back to 3,200 anytime soon. I just think that this is something where you're just going sideways, and it's not even taking the formation of like an extended type 2. We do have a couple of patterns, this Gartley, crab. There's your reaction, but then it comes back down for a type 2. I would say under 2,500, under 2,450, you're failed. A quick question here. Would give you a comprehensive, itemized, detailed list of specific things that cause the M and W complex lines to disappear. What you're talking about are these. Let me go to the other platform. Let me on and do that on the other platform. These top lines. Again, some of the amplified readings relate to. There's a few things going on with those lines, and I think maybe there is a video that we have that discusses these complex lines in detail. When I go over to the, there's some things I'll highlight on the NASDAQ and S&P when we look at it on the HPC Pro platform in a minute. I just want to clear out crypto and be absolutely straight up with the crypto situation that TikTok, again, this is going to become a real nasty, just sloppy time period for crypto. Like here's Cosmos, folks. Cosmos on the daily was supposed to break out. It failed. There you go. Now we're back with a bat pattern, depending on what market, of course, but we have come back, did another kind of swing 886. Let me get a better data feed here. There's Binance on the daily. Okay. Gartley, Shark, that's on the Binance data feed, and there's a few things there. But I will say this, Cosmos under $20 is a complete failure. So we will just keep an eye on these. These were supposed to be the ones that are breaking out. This should do a move like Luna, and this should have broken out, and this should be one of those that does break out. But you just kind of keep on raising your stop levels for make or break situations, because that's where we are. And within the long term, the context of the long term trend, just each of those pivot points, higher lows, but again, has to come off of this now. Or you get something like Avalanche. I mean, look at Avalanche here on Coinbase since it came out. Big bat pattern. Here's where it came out on Coinbase, little sell-off, massive rally up into November, all the way back down for a full reset to the 886. Beautiful type 1 reaction. That's nice. But now we have to come back to complete that type 2. That's under $60. Keep an eye on that one. Let's go to the X's, the triple X's. XRP. I did mention that briefly. Again, it's another one that's taking a lot of time. And what this is going to do when it's taking time is probably come back and retest at long-term XA level. This is a weekly chart with your XRP, folks. And let me improve those highlighted lines. You can't see them. This is the Gartley. Weekly Gartley. And again, this is one of my the top, I would say top 3 weekly patterns of everything that has developed in the past year. Really since a year ago, we peaked out on crypto. Bitcoin was earlier. But this is a phenomenal pattern. This is also in kind of the 2 of 2 for XRP. I just think this could probably spend 3 more months consolidating. I just don't see, unless this thing was going to really pivot out now, and I mean now, I don't see anything happening here. You're already, you've triggered stuff like this weekly amplified confirmation. You break it down, say daily time frame. Okay, we had some things back in end of February. You're scraping that 65 level, 62 level, which is the XA, that's the big number for XRP. Every time it comes down, bounces right back off, but we could come down, do one more time, or even 2 more times before it even starts to try to get back out of this level. It's just because the whole market's that way. Yeah, here's XYO. It's a total duck. I'm still long it, and I'm not liking it. This has been another speculative one. I thought I could hide out with a nice fat position, and it's not working out. Just doing garbage. I'm going to hold on to this. Um, you know, this is one of the ones for sure that I thought we could speculate into these altcoins, and we did nothing. So let's see. XMR. Okay, this is a little bit better, but we're now back up against. I think we showed this bat a while ago. This one had a big run last week. That's right. On the daily. I know daily time frame. There you go. This was the daily time frame for XMR. Let me fix that color here. Don't know why this is doing that. But XMR, type 1 reaction, and at least it has something. At least it has a really nice crab pattern. But beyond that, we're just looking at type 1 reactions here. And this would be another one. Okay, you see it. There you go. I just was able to set the highlight. 201 was target 1. And it hit exactly and came off. Type 1 reaction is over. And let's look at how this sequence played out, because you did have a real nice first thrust, but it came all the way back down. All right, there was no follow through once you got out of the zone, and 30 bar rule took effect, because look, you start there, right there you're 10 bars in, right there you're 20, there's 25. You start rolling over at 25 and you're not at your target, you're adjusting stops. I mean, there should be no hesitation in that type 1. Came back for the retest and actually now hits target 1. Come back down. Full retest at 141 of the terminal bar is likely, but minimum XA level is where the type 2 would start. So it hit target 1 at 201. Just got rejected. Coming right back. Now, as soon as that hits 160 level, all right, get your eyes on it. That's Monero, by the way. And privacy coins have been running reacting is the better word, folks. One other one down here in the triple X region, Zcash. Zcash has now got a bearish Gartley. That's not what you want to see if you're bullish. Zcash it's like a 4-hour. Yeah, it was a Gartley down, 4-hour Gartley down here. But the daily, I'm more interested in the daily time frames. Look at that. My guess on Zcash, again, terminal bar went on. Look for type 1, target 1 at 130. Just a reaction. It's garbage, but that's where we are. And that went from 80 to 150. That's a huge move off the low. You're talking since basically mid-February in 3 weeks. From that C point there at 89, 75% move. That's over for now. Not much else you can do with that. Okay, let's get into the markets, because the crypto thing, any bullish pattern is going to be a reaction. Any bearish pattern, careful. Let's go to NASDAQ quickly, and there you go. No, that's not the right one. NASDAQ, folks. Yeah, we're okay. We're already rolling down. I knew it. I thought that would happen. We're at new lows of the session. Where are we now? Down 100 and something. Folks, I don't want you to even worry about NASDAQ until we're well below 13,000. And get the heck out of here. Here's where we're going on the daily. Just book this. Again, sometimes this stuff Takes longer, but the malaise is here, and we go down. And when the malaise comes, that's going to be a failure of this crab pattern. But I will not veer from this continued correction until we hit the crab. 12,884 on the NASDAQ futures, the NASDAQ 100. That is your target probably this week, or if, yeah, this week. It's not going to be next week. It's going to be this week. It's a joke. There's nothing here. Um, you got a lot of garbage. And I hear a lot of people talking about buying stuff because it's on a discount. It's not even close. Look at your amplified RSI. Okay. Still coming back down. You remember we talked about this last week. This continued series of lower highs, and it rolled over again last week. So you're trading 13,135, folks. Just talk to me down here. If you're bullish, I mean, really, if you're bullish in this environment, you can't be bullish until under that 1618. Now, if we look at the amplified downtrend, look, this is the amplified RSI, hypersensitive. It's the proprietary indicator we use based off relative strength. And it has been showing us this continued downdraft of lower highs in the indicator. 1, 2, 3, 4, 5. And that was just a few days ago. Do I think the NQ could hit 12,880 before Fed meeting on Wednesday? Absolutely. And that's a great comment. So, big bad Fed going to come out with a rate hike this week on Wednesday. I think that's exactly not only the scenario that we should be favoring, but a great way of how patterns and major announcements come together. And maybe do a type 1 reaction and then dump. Okay, this is, maybe it's not even that high. I think this is the scenario you want to be considering. Forget first quarter. First quarter's done. This first quarter is going to be one ugly candle on the monthly, quarterly, everything. And with the daily pattern pointing us where it's going, we also see that we see amplified RSI heading back into the oversold. Now, one quick comment about what someone was asking. Okay, this dotted line, folks, what does that mean? And that's an important thing to look at because it's a subtle dotted line, but it tells you a great deal. First of all, the dotted line means there is a complex structure in play. Okay, it's an in force, meaning whatever this move is against that dotted line, especially when you see the green line, because the green line goes on when you hit the minimum 50. All right, you have to come back, you do the return, but the dotted line also, it shows you the complex structure and the lowest level. Why? Because if you break that support of the RSI support, that would be remarkably weak, much like you did back here. Look, that prior reading. Now, this was not a complex reading. That's why you do not have a dotted line, but the fact that you took out the prior low is significant. Take a look at this. Complex reading. Dotted line goes on as soon as it comes out. Okay, red line goes on when you hit the 50 level. And we would still look for that to retest. Now, your dotted line stopped because this RSI exceeded the prior reading. Still an RSI BAM because the secondary test, it just was a lot uglier. But it stopped because it was an RSI breakout. You know, your RSI breakout is there. And you still went higher sideways for months before you got a signal, rollover signal. So just be mindful of that. It's helpful to understand and respect when those lines are violated, but we're focused on show me when the red line stops, I start looking to the right, or here, when the green line stops, okay, I start looking to the right of that. Do we see anything to the right of that green line? Yeah, we have a bullish crab pattern, but it's lower. And it's probably 20 bars to the right. That's okay, but we start looking. I think it's important to be aware of the confirmation strategies with the patterns. They'll tell you a great deal what's going on in that zone. What causes it to disappear? As I said, when you take out the prior reading of that complex structure. Okay, that's and I know what your next question is going to be. Why would it stop if it didn't take out? Because there's a 1,000 bar limit to it. Sometimes it's 300, depending on what you default set on that level. But it stops because that prior reading was taken out, or you just ran out of bars. Like, I think I have to look. It's either 1,000 or 300 bars. But we got to settle in here on the markets, folks, and realize this is going to be a long, ugly year. It's not going to be fun. I said that last week. This is not going to be your fun time like we had a year ago. You're going to have to kind of hold your nose as you take some long positions, realizing that other things are really driving those prices. And then we look at equities in general. I don't have to put any patterns on here, just a couple trend lines. There's the COVID low. Here's your money printer. Okay. Downtrend is broken here. It's broken there by definition because you took out the trend line and you continued against that prior low. So this is critical to think about the whole last 2 years. Violation there, but the continuation of the low, the failure of the low, and then bam, 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 bam. 5, 6, 7 down. How about 10, 12, 15 down? How about 886 down? It's time to get totally legit here. The 1618 is going to be a minimum offshoot, maybe a 2.0. This last little ditch up from October to January was total fluff. And I expect a minimum 1618, if not a 1902, down to 12.4, 12.880 is your minimum. And then you do that as your minimum short-term extension metric against some kind of long-term COVID 50 or 618 even. Your 382 all-time 236 is also at about 12,900. But the COVID 50% level starts to show, okay, maybe this could come down a little bit more. And again, this is going to become the relevant measurement for the rest of the year. Sometimes that happens. 382, COVID low, 12,889, 12,898. And sometimes large measurements can dominate the overall framework until it's tested. The 50% retracement for NASDAQ of the COVID fluff rally, 11,701. And it's, again, look at the price action. Look at the individual serial lower highs. Lower high, lower high, lower high, lower high. Okay, not a lower high, but that was garbage. Lower high, lower high. Okay? It's not what... This is acceleration, folks. I need to really be clear on the fact that you are in an accelerated move until you get to 12,898 or 12,880. It's going to be down, and the longer it takes, the worse it will be. That's the one takeaway from the NASDAQ 2000 bear market. We topped out, and I'll have to go and show you the chart. Maybe do it tomorrow, not today. I'm not in the mood. I want to rip through the other markets. But we just start to languish, malaise, things get worse. Like, okay, Foxconn shutting down. How about Apple, right? What do we know about Apple? Apple's in a type 1 Long-term correction. Type 1 reaction on the weekly, folks. Oh, Foxconn? Oh, okay, sorry, we can't make any iPhones for a few weeks. Here's the Apple pattern on the daily. It's a massive deep crab. Now, I want to just, I think the lesson is there's nowhere to hide. I don't think there's anywhere to hide. I think this volatile environment, crazy environment, we've seen in oil and gold and the rest of them. It's this whole thing is going to be volatile. Here's Apple off that type 1 crab pattern daily. Hop level on Apple 175, and then we have perfect confirmation that came. How many bars? Check this out. Here's the terminal bar right there. The confirmation did not come until 50 bars later. 50 bars. What's that tell you? All right, here's 30. Where's 30? Right there. That's 30, okay? Pretty interesting. Tells you, all right, initial reaction, probably a dud. But then you get a secondary confirmation. That's okay. That does happen. And, oh, all right, Apple would be one of the last ones to go. Everyone's going to try to think they can hide in Apple. No, you're not going to be able to hide. Target 146.79 on Apple. Book it. With a very good possibility of 135.12. That's your target 2 on Apple. We have this blue pattern. Yes, that's a pending alternate bat, but this is ugly. This is ugly. And look at our confirmation. We're hitting the oversold right now. And HSI still needs to register down here. This is going to be an ugly week. Absolutely, you're not going to hide in Apple. You're not going to hide in Google. You might hide in Amazon, but under 2,500. Why? Because we're going to have to come back and retest this deep crab. Amazon, beautiful crab, beautiful. Type 1 reaction. Rejected. Target 1 was 3,100, 3,110. Now we come all the way back down for a full XA test at 2814. Terminal bar was 2707. That's your zone, 27 to 2800. And we do have confirmation. That's back at 2750 area. And what's it doing? Tell me what it's doing. Folks, it doesn't take much to really just read it. You read it to yourself and tell me what you come up with here. Lower high, lower high, consolidation, lower high, lower high, lower high. What's it doing the last 30 bars? Ugly stuff. And we know from the harmonic pattern framework, this is in a type 2 return. So there's the target 1 right there, completed. Where's 30 bars? 30 bars for the return is right there on the 21st of March. Interesting. And so I'm looking at a full retest, 2,700 on Amazon. Come back, if in your best case scenario, come back and retest that HSI at 2733. For the week, that means you're still going to go down. Week, end of the quarter, I think, a lot of this stuff is shaping up to where people are going to they're going to sell into the end of the quarter. You're not going to be able to get away from that. And that's still down. Fun session, right? How are we doing today? The bear is strong. Yeah, unfortunately, this malaise it's not stopping. You're not getting the fundamental changes you need either to see this change in a structural perspective. If anything, you're getting more. You're getting more structural inflation built in. And more of the other fun things that we've talked about previously, like energy problems. Really quick for S&P folks on the futures, your 41.91, the hop level on this shark is at 41.10, and that's where you're going. Until we get down to that 41.10 level and do another retest, this is We can assume that this is an extended type 2 if we wanted to be as really as optimistic as possible. That's what it is. It's a type 2 that's going to retest again. And we failed this HSI signal a couple days ago. That really should have registered. That would have been a lot better, but it didn't. And this is something to take note of. A lot of times when things fall shy of those critical marks, they eventually come back and hit them, like maybe to the right over here, which is what I'd be looking for into the week. We're still in a type 2 return. We hit target 1 back in January, February peaked out, rolled over, and now just on the slide. Like everything else, sliding lower, sliding lower, sliding down to larger targets is the better way to say it. And until you hit those targets, this sliding action will continue. I think I've had it, quite frankly. I've been smelling this since, I'm going to have to say, I've been frustrated with the market since August. And maybe I've taken it out on a few occasions a little too politically because it really doesn't matter who's president. And that's the truth. It does not matter who's president. I mean, this guy, come on. But overall, it doesn't really matter who's president. Who's Congress and what they do, tax policy in general, what kind of tax reform, tax environment. But no. Let's go to crude oil, folks. Crude oil, I mean, 886. Who loves the 886? Raise your hand. Let's all give a big shout out and forever deep respect to the 886 retracement. And I think it was Mitch Ray who was saying the first person to get an 886 tattooed on their body, I want to see it. Because that's what we ran into last week. It hit and we're in a pause. So we talked about hitting this pause up here. Look, I'm not worried about it. Okay, this is just a pause against that first run. That's the first ditch run. There you go. And let me bring that up. 886. Learn it. Live it. Know it. Something like that. It was 125 and it got smacked to 100. But guess what? Get ready. Get ready. We're looking for the return. This has been, there's the 886. Is that amazing? And that was on a Sunday night into the Monday session and just never even right above there. So where's this going to go? Let me go to the weekly. I mentioned something last week that I thought this could be a B point. And I think it can. I still think it can. Let's get the December contract up. That's a better one. So, no, sorry, go to futures because I have to show you this. So if we assume that 886 long term, again, let's back up to the larger assumption. Are we assuming that crude oil is going to break out to all-time new highs? Yeah. Yeah, that's the assumption. The assumption is that crude oil eventually goes to 147, 140, above 150. But look, maybe it's this 886, little 33, 382. I don't know. 382 would be all the way back to $80. That would be something else, or 85. You're trading 101. I'm more inclined to, if that was going to happen, I would be more inclined to see a retest of the 126. But let's just say long term, and I said this last week about that this oil thing was not about just this month, that this really kicked it off, but we're talking something that's going to last 3, 4, 5 years. Come back to a B point there, and then the 1618. That's how we get, as I said to before, our super long-term play for crude oil Your massive spike scenario would be essentially a 1618. Let me highlight it. It looks like this. All-time 1618 is 256. There you go. This looks like this. 1618 all-time weekly 264.71. 265 is a good number. In the same way that I was lining up the 886 over a year ago thinking that whole range was possible, I feel like this is a B point. And now, this reciprocal relationship, not to mention how can we get an ABCD? Like if we had an ABCD, there's your A to B leg. Okay, C to D to match up with 264 would be like that. It's kind of a way to approximate it. You know, the first leg was minus 40 to 125. Okay, 165 off of whatever. You know, come back to 100, which we did, and do another 165 leg. It works like that. That's a long-term call, but that's how I see it. Gold, folks. Remember another massive crab reaction. Remember that last week? And the 886, the 2060 level, everything. I'm fine with this. We know that gold's done a heck of a run. For gold, after going sideways for 2 years and pausing, I'm not surprised to get a clear weekly rejection. X to D, 1618. Exactly at 2068 gets thrown down. Now, come down to target 1. Target 1 at 1925. And then make the return move where minimum hop level or even full breakout. No shoot, no shirt, no shoes, no dice. Thank you, Neon Knight. No shirt, no shoes, no dice. Learn it, live it. Learn it, know it, live it. Of course, the great Judge Reinhold. Brad. Probably the greatest high school movie ever made. Without a doubt. Fast Times at Ridgemont High. You younger folks need to go watch that. Because we all need to laugh right now. We need to laugh a little bit. It's kind of, part of the trading plan. Go watch one comedy movie a week. Let's keep it somewhat lighthearted. So this is the plan for gold, and I would think most commodities too. 1618 slap rejection, come down to target 1, and then start again. Not a problem. I'm really fine with that. I do want to. What's the other one? Here's the. Let's look at this. Here's gold. Barrick Gold, that is. And we were running into some daily patterns. And this is where I think we're going to get a great opportunity off of this reaction. We get some kind of quick, sharp reaction off of all of the resistance levels. Just like we saw in continuous futures contract. Come down. Here's Barrick Gold. Target 1, target 2 zone, and go again. A lot of the gold miners did not participate in this last rally to the extent you would think they would have or would have broken out. Here's Barrick Gold, sorry, on the weekly. There's your all-time data. That gives you perspective on Barrick Gold. Probably one of the best gold miners you can own if we're going to see gold move. Pretty remarkable that this hasn't done much. I think part of the reason is price of oil is going to hurt these guys. But if we get the move in gold that we're supposed to get, which is 2350 as high as 2500, long term, that's a long-term number. You come back and retest these target patterns, kind of these looping, big down move, decade-long move, come back. Now we're just grinding in a large type 2 return back up to 46. Doesn't look like much. It's really difficult to see that opportunity, but that is what is in development. And this most recent correction is probably the one where we pull back hard and then we snap on the next one. Here's the Nugget Miners. This is the 2X Junior Miners. Just another one. I think in the 4-hour chart's better. It's a bat pattern down there. 4-hour. Oh, this was a crab. Really nice type 2 crab, folks, on Nugget Miners. So gold's in a pause, come back down, and then the next one. Go again. Couple questions really quick. The certification on Harmonic Trader, that program is on hold for the moment. My current project is to roll out the Scott bot with the new TradingView algos, the new TradingView script. I will be bringing that program back probably with a broker. So someone's asking about, do I still run the certified course? And not anymore, not at the moment, but that will be coming back. What we're working on currently is now with the new script, PineScript 5, the Scott bot is back in play, and that's going to get rolled out hopefully by the end of the month. Stay tuned. I'm sorry to drag out. We had to do the major pattern algo update since everything starts with the levels based off the algos. Get the TradingView platform no matter what. If you're watching now or you are watching the recording, please go to Harmonic Trader and just send your TradingView username to a programmer partner at HPC at sr-analyst.com. That is our partner over there at Divergent Software. And tell them you want 14 days. Tell them you want 21 days. Send him 21 days. Hey, can you give me 21 days? He'll give you 21 days. And then go with that. One or two more. I did want to post a couple of Dow stocks that are all the way back to where I want to keep an eye on a couple of these that have trying to come back and retest some major patterns. Walmart has been squeezed between these two for a while. I'm watching Walmart for larger Dow indications. Super choppy. You've got Walmart versus something like Target, okay, which is doing much better things here with that uptrend. Disney, okay, this is the big one we had targeted because of some massive patterns on weekly time frame, and we were looking for Disney. Was it weekly or daily? Hold on. This Disney was a daily. It was this chart. And this was a deep crab. We were talking about back in January. And we were coming down into this target 1 area, and we had confirmation down there, but no check back. Look what happened on the check back. And then look what happened just recently. Beginning of the month here, or end of February, was another bearish HSI, and we have been straight down. Disney is about to make new lows for this move. And another reason why this is one of the ones that's, I would say, is leaking, if you will, meaning there's nothing bullish here, and if anything, this is poised to hit target 2 at 121.69. Just these are signs of the larger downtrend still in force. Microsoft, ditto. Microsoft, under this, there's a whole bunch of support down here at 275, but it's not holding. And here's the bat pattern from, on the 4-hour time frame, is a bat from January. Actually, a type 2 bat. Hold on, come on. Why isn't that coming up? I'll have to check the bars. Your 886 was here. I don't know why that's not coming up right now, but there's the bat. There's a type 1. There's the type 2. We should be going up. We are checking back right now. I mean, you are hitting kind of last ditch levels on everything, folks. That's why I should have a pattern here. I don't know why. But you don't need the pattern. Just know that these levels that we're currently not able to bust above 280, 275, they all fail and could fail between now and the end of the month under 270, and that's a major failure. That's why this is different. This thing is different. You're scraping major corrective lows in just zero constructive, positive, bullish behavior on an individual basis, on your indicators. I mean, just really nothing for you to grab at where, go ahead, buy 100 shares of Microsoft. I would much rather buy Microsoft if it's stabilized for the next 30 days and then broke out. I mean, above that prior high. You have not, look at Microsoft just since it peaked out on the 4-hour. Okay, right there. That's December 30th, end of the year. Run it up to the end of the year, great. They open the year straight down. Pivot high, lower, pivot high, lower, pivot high, lower, pivot high, lower. And not to mention, the 2nd, the 9th, every week, weekly, 1 week pivot highs and then break down lower. This is not, between that and Apple, those are the two that will get the market lower on the next run. Apple, something's either going to happen to Apple, which I thought would happen this morning with that Foxconn news, or Microsoft. Because once they break down, the rest of them will just accelerate. You will look at stuff like the once beloved Facebook, I have been saying all along, goes to 265. And that's a minimum. This is going to be the first FANG to do a full reset. Facebook off the COVID low. There you go. Not one major retracement harmonic level did that hold on the way down here. There's your 25, but really 886, that's what you want to trigger. 166. 166, and that's minimum. I think 140 on Facebook. On this move, and you're not going to have a single month be higher than the prior month, or maybe even a 2-week high until that is realized. That's how bad this downtrend is. That's how bad this destruction is. And you better hope it holds there, because then we get into the possibility of something like Facebook just falling apart. Believe it. Okay? You're on that long-term look all time. You accomplish those lows. I'm trying to even fudge it. Don't want to fudge trend lines. But tell me what's doing at that trend line. And if our target, and we know the harmonic structure says 166.75, and you're going to break this trend line, then you're going to have the most severe challenge to the total lifetime uptrend since IPO. And again, that's not indicative of any kind of recovery in the major markets. That's where I'm getting to, folks. I'm ready to go bear market. I'm ready just to say, I'm sorry, but there's too many things going on. There's too much technical damage to where this kind of stuff has just started to fall. And how can I say that when you've already been cut in half? Because this is acceleration phase. So if you buy something, you get into a drawdown, you're talking tech cycle, 2-3 years. I wouldn't touch that. I wouldn't even touch stuff like semiconductors. And I said this, here's Intel. Intel's got major problems now. Major problems. Why? There's the 2-week chart on Intel. Semiconductor is supposed to be a shortage. Well, this is where the shortage hurts them. They can't make any to sell. Here's your monthly on Intel. Beautiful crab pattern monthly, folks. This is something I have been talking about. I think I did a whole workup 2 months ago. And I hate to be such a bear, but bear goes grr when the printer goes burr. And that's what we're doing. Perfect retest. Type 1. We're still in a type 1, so talk to me at $40. And we're about to take out the lows of the week and the month and the bump, and measured. We measure this. We know that type 1 reaction has to be realized before anything else could happen. That's the harmonic way. This is a perfect crab pattern too. Almost perfect. 50 at the C point. If that was a 618, that would be a perfect structure. 40. That's another 10-15% lower. And that is the minimum. I'm saying between 40 and 29 is the measured long-term move for Intel. That's where it goes. Don't like it, but that's where it goes. That's why leaking now here as the markets continue to break down. There you go. Let's get back to NASDAQ and wrap it up on NQ. We have to get tough. I mean, this is where I think it's real work. Here's the 5-minute NASDAQ. Failed. 5-minute failed. All of this fails. Practically new lows of the session. And recall, this is your 60-minute for today. This is the chart to be looking at. And until even we get down to this hop, all right, we're all the way back. We've retested the 60-minute. There's a big bat pattern here, but it's a type 2. Come back all the way back down for the 2. Even that hop level, 12,833. 833. 12,833. Our big weekly levels are 12,890. That goes there by tomorrow, by Wednesday. You guys we have to go there. We have to get ready to be, and again, something happens and that fails, that's it. It just is a problem where this is a different situation, I think, because you have a lot to deal with. I wouldn't be looking at the daily. Look, the daily crab pattern. We have to hit that first. So don't think that I'm saying just jump in here when we get down there. No. What I'm saying is continue to play the short side. Look for this eventual realization today or tomorrow. Absolutely. I couldn't believe they tried to rally that thing this morning. It was actually up 50 or 60 and then just killed it. And then we'll come back tomorrow. Let's see if we could be here tomorrow. We could be at 12,884 by tomorrow or even by the close today. That's how severe this whole thing is. There's even some candlestick formations that I see. You could even say there's, depending on what your time frame is. But this is where you are. And again, the malaise begins under the pattern. I mean, the malaise already started, but when you fail your first big pattern off of a major correction, and let's say something doink goes like that, and it's a big red candle, that's the first sign. It would look like this. Okay, big red candle. Something like that. Through the zone. It's a good way to visualize it. And we'll see how that shapes up into tomorrow. And certainly by Friday. By Friday, this definitely will be hit. There's nothing stopping that. But what I'm looking for is, do we get a massive candle, a 400, a 5, an 800 point down wick, which really then says, okay, that's not going to hold. That's the thing. If you're not going to have anything at that level, like HSI's not there, Amplified's coming back down. If you don't have any kind of concrete confirmation, the chances for a failure just increase. Now lows of the session again. Here, let's really quick. Down 214, folks. 214. Quick update here where, Dow's up 125, but that won't last. S&P down 18. And S&P is over under 4,100. Gold's up 22, but again, we know the story there. And crude oil, again, come back, hit 100, bouncing off the 100 level. I expect crude oil higher by the end of the week. Let's come back, see where we are on Tuesday, folks. Hey, I just been really thinking about this for a long time, and we have to line this up the way we see it. We got to stay strong. Yep. I'm glad you guys like that. It's don't there's plenty of time. If you're looking for long positions, there's plenty of time. And we haven't even seen major patterns complete yet. And then if you want to be on the short side, favor the short side on little 5-minute intraday rallies and continue to beat that down until it hits the 12,884. I mean, you're in a magnet effect right now. You're in the magnet move part of the pattern completion and we have been really since basically January with that kind of move. This is not a bat action magnet move. It's kind of a crab action magnet move down to the 1618. And we'll talk to me there. Talk to me tomorrow. We'll be back tomorrow at 11:30, folks. Thank you, everybody. I'll have more information on the one-day course next month and updates on the other gold memberships, Basic Plus, some of the new stuff coming out. Start at harmonictrader.com, please. Go over, become a basic member. And if you do have a question, best place to reach me or my assistant is on the Discord. So get into there and join us. But get with the software, please. It's going to change your whole trading game. So until tomorrow, folks, thanks again. Have a great one. Go get them. And we'll see where we are come tomorrow.